and Assalamualaikum to everyone. Welcome to our presentation on Fundamental Financial Accounting and Reporting. First of all, I would like to thanks to our lecturer, Madam Salina binti Saleh, for guiding us to finish this project 1. My name is Nur Arbiatun binti Rizahan and I will introduce my team members who contributing in significant this project. So here we have Nur Shahira binti Ridat Mudin, and the next one is Nur Risha Atika binti Haisha Hairi, and then Liana Akila binti Muhammad Amin, and the next one is Nur Batrisha Alia binti Zurizal, and the last one is me, Nur Arbiatun binti Rizhan. So here is our content in this presentation. Let's start with business background, which is Klinik Suhaida. The owner of Klinik Suhaida is Dr. Suhaida binti Muhammad Sharif. The clinic is located at Pusat Perdagangan Alam Jaya, Puncak Alam, Selangor. The company has long operating since 21 November 2002 until now. For owner capital, the owner personally invested Rm50,000 from his personal saving to start the business. This type of business is sole proprietorship, but now it's changed to limited company Sendirian Berhad.
Now, I'll be presenting about the business characteristic of Klinik Dr. Suhaida. Klinik Dr. Suhaida was originally registered as a sole proprietorship, which means it was operated by a single owner without forming a separate legal entity. Later, the business transitioned to a limited company or Sendirian Berhad in Malaysia. This change typically provides more protection to the owner by limiting personal liability and also allows for better expansion opportunities. The entire registration and business transition process is done through the Companies Commission of Malaysia, also known as Suruhanjaya Syarikat Malaysia or SSM. This is the main regulatory body in Malaysia responsible for company and business registration.
A classification of business item is into 5 accounting elements, which are asset, liability, revenue, expenses, and owner equity. The first one is asset. Assets are resources owned by the business that provide future economic benefit. They are divided into 2 categories, which is non-current asset and current asset. For non-current asset, we have air conditioner, clinic equipment, buildings, and so on. While for current asset, we have cash in bank, cash in hand, and also inventory like medicines.
A liability is an obligation result in an outflow from the pharmacist's resources. For the current liability is accounting fee payable, SOCSO payable, EPF payable, audit fee payable, and account payable. Besides, for the non-current liability is hire purchase loan, hire purchase Islamic financing loan, and deferred tax liability. Expenses is decrease in economic benefit during an accounting period in the form of outflow. For the expenses for this pharmacist is office expenses, medical supply costs, utility expenses, maintenance costs, salaries and wages, depreciation of assets, transportation and delivery, licensing and registration fee, and insurance. Revenue is inflow from activities that constitute an entity's ongoing major or central operations. Revenue for this pharmacist is consultation services, diagnostic services, medication, sales, minor medical procedure, vaccination services, panel clinic services, medical certificates.
Next, owner equity. What is owner equity? Think of owner equity like the true value of you share in your own business. It's what left over after you pay off everything you owe, your debts, bill, and other obligation. Here's how it breaks down. First, retain earning. Imagine you've got a piggy bank for your business. Every time you make money, but don't spend it all. It goes in there. That's your retain earning. It is what you are keeping in the business to help it grow. Second, initial capital contribution. This is the money or stuff you put in when you start your business. Maybe you bought equipment, stock up on supplies, or put cash in the bank. All of that is your initial capital. Then, withdrawal. Sometimes you need to take money out of the business for yourself, like paying your personal bills. Those owner withdrawal reduce you share in the business because it's money you've take out. And lastly, additional capital injection. If you decide to give your business a little extra push, like adding more cash or buying better equipment or paying off debt, that's an additional capital injection. It boosts your ownership value because you are investing more.
Next, I'll explain the recording process in the clinic's accounting system, which is essential for maintaining accurate and organized financial records. There are 7 key steps in this process. First, identify and analyze transaction. The process begins by identifying and analyzing each financial transaction that occurs in the clinic, such as payments, expenses, or purchases. Second, journal entries. Once identified, these transactions are recorded in the journal in chronological order using double entry accounting principle. Third, general ledger. The journal entries are then transferred to the general ledger where they are categorized into specific accounts like cash, inventory, or salaries. Fourth, trial balance. After that, a trial balance is prepared to make sure the total debits equal to total credits. This helps detect any basic errors in the recording. Fifth, adjusting entries. At the end of the accounting period, adjusting entries are made to reflect any occurred and deferred items that have not yet been recorded. Sixth, financial statement. These adjusted balances are then used to prepare the financial statements, including the income statement and balance sheet. Seventh, closing books. Finally, the books are closed for the period, and temporary accounts such as revenue, expenses, are reset for the next cycle. Each of these steps is vital for ensuring that the clinic financial records are accurate, complete, and ready for reporting and decision making.
Have a 5-point of range of recording process in financial accounting and reporting in a sole proprietorship. First of it was help quantify financial performance which show revenue, profit, and expenses clearly. By analyzing sales, owner can assess which areas are performing well and where improvement are needed. Secondly, avoid overdraft or missed payment with always keep track of due date and amount. When financial records are up to date, the owner can monitor upcoming bills and payment schedule by reduce the risk of overdrawing a bank account or miss a payment deadline. Thirdly, tracking payment received enable better with detect delays or default early. Tracking receipt always help the owner know who has paid and who has not. This support timely follow-up on overdue invoices, ensures accurate cash flow projections, and build stronger customer relationship through proper documentation. Fourthly, help plan the budget for the future with making good financial record provide insight into where the money coming and from where it's going. This allows the owner build more realistic budget and set spending limit. Lastly, recording can make a proof of business activities in case of legal proceedings with proof income for loan or gains. Daughter can accurate record serve as legal proof of the business existence and activities. In the case of a dispute with a client, tax audit, proper documentation can protect the owner from legal proceeding. That's all from me. Thank you.
Let's move to the weakness of recording process. First, prone to human error. Because we are relying so much on people to manually write down or input information, there's always a chance for little mistake to slip in, whether it's a wrong number or missing detail or even misleading handwriting. This small error can have a big impact, especially when it comes to a patient's health record. Next, patient information leakage risk. Right now, it's easier for sensitive details about patient to be seen by people who should not have access. Maybe papers get left out or a file get shared without proper protection. This put patient privacy at risk and can make people feel uncomfortable or unsafe about sharing their personal information. There's also high cost of hiring accountant firm. To keep up with managing all these records properly, we often need to bring in outside help, like accounting firms, but that can be really expensive and it's money that could be better used to improve patient care or clinic facilities. Furthermore, no standardized digital system. Without a single digital system everyone can use, things can get messy. Each person might have their own way of doing things, which make it harder to find or share information quickly. It can feel like we are working in silence instead of as a team. And the last one is time consuming. It takes a lot of time to write everything down by hand or go back and check notes. All that time adds up and it can mean less time actually spent with patient, something that's at the heart of what we do. So that's all about weakness of processing.